Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
All right. CPI today. I wish I was a little bit earlier, but we're okay. It doesn't matter. Let me come into the charts real quick. A few things to show you. 10-year Treasury, it is down in the overnight session. It does look like some people are hedging themselves for the CPI to be higher than expected. I think that the estimate is pretty good. I would be surprised if it was like widely away from the estimate. I would prefer to see it a little bit lower. I think that would be really, really good for the market. But if it was high, it could really, really destroy the treasuries here because, you know, another one of those sorts of things could be really bad for us, right? S&P 500, still a little bit, I mean, a little bit of an uptrend, but very measured moves. Oil also still on the upside here. Gold. So there was news about trade deal with China and the U.S., but the statement that came out was actually kind of like a nothing burger. So there was like this gold like just plummeted and came back. You see silver kind of actually did a similar thing. Copper really got hit. Oof. Japanese yen and the dollar. Not too much movement. Bitcoin still up there at 1100. I tell you what though, this move right here was a move. It was a move in Bitcoin. All right, so I turned the robot on to see if it would try taking a trade into the news. So it did. I have turned on the two variables. So it should, in 5 seconds here, exit the trade. Let's see. That's not what's supposed to happen. Did I turn it on? Come over here and see the properties. Can enter during news. Oh, I turned both of them on and I'm not supposed to turn both of them on. Okay, it's gonna hold through the news because I told it can hold through the news. So it's going long into the news. We'll see what happens. Oh, make sure our voice is on here.
Target filled.
Well. U.S. headline CPI month over month, spot 1 versus spot 2, and core CPI spot 1 versus spot 3. Wow. Guys, maybe tariffs don't cause inflation. Who knew? It's not like anybody was saying, well, but the destruction in demand is more than the price increases. And have I not been screaming this? I have not been screaming this from the rooftop. I've been saying it. I've been saying it to you guys. I haven't been out on Twitter like, this is ridiculous, but come on. We've been on this the whole time, haven't we? We've been on this the whole time. I am really, really surprised. Normally when the number is off, like it's a spot 2 instead of a spot 3. Spot 1 instead of a spot 3 is huge. Okay, well, we're likely in a little bit of a vacuum here. So let's see if the liquidity hole is enough to suck it back down a little bit. That's a pretty good jump. This is a situation where I could potentially look for a let's just take it somewhere and hold it all day. But you got to be careful about where you take that. But it doesn't matter. The robot, the order flow going into it was correct, right? And the robot caught it. So here's the thing. I don't really want the robot to hold through the news. But my backtesting does show that it makes more if it holds through the news. So I don't know. I don't know what to do. By the way, good morning, Paul and Ray. I'm just getting a headline saying that the total effective tariff rate on China will be 55%. Wow. RTY up 1% on the day. The big winner followed by the NASDAQ at 0.42. So that is really interesting. I mean, I wouldn't expect the treasuries to be up 1% on this sort of a thing. Like, it's different. There's leverage involved, all of those sorts of things. But it does kind of feel to me like RTY went more than the treasuries. I don't know how I would adjust between the two to see that, but so we've developed a little bit of a distribution here around 13 to 14. We're back to pricing in 2 cuts this year. I'm looking at the micro treasury yield futures and seeing that the spread is 4 ticks. Maybe it's just because I haven't been trading. The liquidity is not there because Seth hasn't been placing as many trades over there. But I do want to take a shot in here. I don't think that would have, well, kind of wonder if I had clicked a little bit faster there. I don't think that I would have gotten filled, but it would have been interesting to have seen. Probably that it went down like that, it probably wouldn't have gotten filled, right? If I did that, it would be pretty amazing to be up 5 ticks just like that. Okay, well, it's already starting to push. Are we going to break the high already? It's 5 minutes. I'm seeing that, like, right there. That iceberg. Oh, fine. Let's see, these are where, yeah. You're going to chase it. You're not going to get full down limit. Yeah, I could hit that 3. Now the spread has come in. Whew. Okay, that's a hands off for me. Like that looks incredibly aggressive, but it probably is a long, but that's just an incredibly aggressive flow coming through there. And those have a tendency of exhausting themselves quickly. See it. This is going to be interesting. It came back. I think that my instincts there were justified, but it might just shoot right back up there. Uzi says, not too bad of a CPI. What more do you want, Uzi? I feel like you're not giving them enough credit. I'm so like, what? How could it be any better? Core CPI spot 1 versus an expected spot 3? It couldn't realistically get better than that. What more do you want? It's not bad. Okay. So let's come back over here and look at a volume profile and just kind of try and see where we are relatively speaking. All I want is for it to not be bad. Okay, fair enough. All right. So we are up pretty big, but it still does not claw back the huge downside that we had after non-farms. And we have made a lower low. Not that it matters, but all the chart people are going to be looking at. Oh, no, wait, it's not lower low. The low before was 12. I'm wrong. I think they'll touch 13 again. Now, another interesting thing for us to watch here is, do they get a rebalance back to the 50 where, like, the robot could take another trade? Because it only does it on crossing above 53. So, like, it has to go below 53 and then come back up for it to take another trade. Oh, let's see here. Donald did tweet on the China deal. Our deal with China is done, subject to final approval with President Xi and me. Full magnets and any necessary rare earths will be supplied up front by China. Likewise, we will provide China what was agreed to, including Chinese students using our colleges and universities, which has always been good with me. We are getting a total of 55% tariffs. China is getting 10%. Relationship is excellent. Thank you for your attention to this matter. Oh, wait. Oh, that is not what I expected. The deal is 55%. But does that mean that, like, rare earth minerals are still subject to, what is it that China is getting? 10%? China gets 10% on rare earth. Is that still subject to the tariff? Because I think before it was They weren't just they were like, they banned the export of rare earths, right? So this is not the deal. You know, like we always said, tariffs are just a bargaining chip. And last time around, they were talking about, you know, well, we need to have guarantees that the Chinese are going to stop stealing technology and breaking copyrights and things like that, right? And they had hangups there, and they were never able to get like the final grand deal done that was supposedly going to prevent China from cheating and yada 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 yada. And now what we're saying is, well, we have a deal, just that we're not going to kick people out of universities, and they're not going to stop the export of rare earths, but there's still going to be tariffs. So it's not the grand deal. And is that it? Is that the end of it? Huh. So, interestingly enough, on our cost basis, they literally came back down to the stop line and bounced off of it. Is that a new high? It was a new high. At 721 at 18 was a new high. Oh, I'm missing out. It hurts so much, guys. I don't think, I suppose I probably could have clicked in at 0.445. And I would be okay right now, but with the way that I trade, I would never have done that. So I don't think I could necessarily call it a missed trade. Like, I placed orders, but I don't think I could call this a missed trade. I think that I would have needed to have been much more aggressive. And it is still being a little bit wishy-washy. Like it's making a new high, but then it keeps pulling back like 4 or 5 ticks. So it's not explicitly acting like the trend day where it just goes nothing but up. I'm not getting trend day behavior from it. The order flow, the market order imbalance does appear to be normalizing as well. Might get break of the line this time. I think I've developed an anchored bias at 445. I wanted to come back to 445. I don't think it's going to. Okay, I know that this comment is going to sound like, okay, Seth. Like that just sounds like way too specific. That sounds suspiciously like technical analysis. But I find it curious that more volume is traded at 16.5 than at 16. Usually there's a lot of action at 16. And so far they've been slipping through 16. So is it, actually here's the question. Uzi, are we seeing moves in the options at that strike price? I wonder if it's, there are people buying calls at 110.16 and that's preventing it from actually touching it. Okay, he says 9.3K open interest calls at 16. 6.2K puts. Well, there's definitely an imbalance there. I guess we would have needed to know volume 2.7K. Oh. So there was just a lot of open interest there before. Oh, that's interesting. Yeah, and these are all 0 day to expiration. Okay. Oh, so wait, there was more. I'm actually surprised to find that there was more interest in the calls going into the news. I would not have guessed that. I think if I was to have guessed, I probably would have guessed that there's more puts. I think that I've seen more discussion of going short treasuries out in the retail world, and the analysts' estimates were more skewed to the upside. Like, I think a spot one, I wish oh, no, I can go find it. Let's go find it. Fear-mongering pundits disappointed again as consumer prices refuse to surge on Trump tariffs. Sent me a screenshot of the board, thank you. Where is it? CPI preview. Okay. So here on Zero Hedge, when I was looking at the preview, they had this, which was, where they were looking. Oh, okay. So I think I'm a little bit wrong. Like I thought that the distribution was more like this, maybe. There was a lot of estimates that were like really high, right? I don't the way they're displaying it doesn't really show it very well, but there was kind of this tail. But it does look like more of them said that it was going to be spot 2. But the lowest estimate was 0.15. And this is headline. This is headline, I think. So they're going to be saying headline, the median estimate was spot 2. No, maybe it is core. CPI X food and energy month over month. Okay, yeah, it is core. Okay, so to get a 0.1 was below all of the analyst estimates. They're organized the same way our DOMs are? Oh, that's interesting. Oh, that is interesting. Let's see here. How do I... Open link. Oh, yeah. It is these... That's pretty common. On this view, what platform is this going through? Because normally there's like different screens and you can get it to change it. Get it to change to show different things. Like instead of volume and open interest, I want to see like estimated delta and gamma, for instance. Power E-Trade Pro. It looks nice. It sure looks nice, doesn't it? I kind of feel this little column here in the middle I'm kind of like, let's get rid of that. You can put all, oh, you can just add them on there as columns. That's good. That's good. That column I can't remove. What would I put on there if I was watching this? I don't know if I would put this up forever, but I do think it would be interesting to watch the deltas and see situations where deltas change and stuff like that. Or better yet, Vega, like the time decay, and see points where like the time decay accelerated. Man, that just got shoved. A big iceberg there at 19. It's not the first big iceberg we've seen through this, but right now, I think this is screaming at me, Seth, you fool, you could have sold it. You could have sold micros anywhere along here and been okay. And you are too cautious. Seven. Gold is a sell. Oh, you know what? I think you might be onto something, Amir. Look at gold there. Gold jumped initially, and now it's getting destroyed. Seth, too cautious now. That can. I know, right? Lately, I've been too cautious for absolutely, absolutely. Is this a test of last session's high? Let me see here. No. You must be talking about something different because we're well past previous day's high. So actually, I don't know. I always get nervous when I'm saying things that like I think that people are going to take as like the gospel truth on technical analysis. Yeah, I understand that anytime I talk about something that is based largely on price, I'm kind of talking about something that's, you know, maybe it's interesting, but I don't necessarily think that it's an edge. Okay. But there is something that we have seen that I would say is different from like a purely random market. I don't think that it's something that you can explicitly make money from, but it is a behavior that is very curious. And it is that if you put a 30-minute chart on there, and you're going to see some places where only one bar touched that price. So if you look on this move from non-farms, there's this spot basically from here to here where only one bar touched that. So we call these single prints. And what kind of happens is when you get to those single prints, you get strange reactions. So they are like one tick away from the single print. And I find that like when they touch it, that there's often like a reaction. I wouldn't say like a reaction like that price moves, but like you see weird things in the DOM. That might be why you see a large order there, but I haven't been paying attention. Was that there before? Actually, can we open this up and maybe see? Oh yeah, we can. Okay. So that was actually probably just the volume being rolled out in front is why there's a big order at 21. shouldn't say volume. The liquidity is getting rolled out in front of the move. You know, another thing I'm noticing though, the trade that I wanted to take was 445, right? So there's 10, there's 20, then 5. Okay, but we miss most of it. It's really been like this whole thing from 435. So it's only been 15 ticks. So the 10-year has made a new high now. 1, 2, and then this whole thing has just kind of been a trend since that. But it's only been 1 basis point. 1.5 basis points. The overall move is maybe been, well, what's the highest that we've seen today? 4.5. 4.5. We're now 4.15. Okay, but that's 9 basis points. I don't know though. This is the sort of a thing that could make me think 15. Once you get into 15 basis points, that's when you get into some of the largest moves that we've ever had. So 9 still seems less than I would have estimated. What about volume wise? That's what I should really be looking at, huh? Not even following my own advice here. Good grief, Seth, you hypocrite. The change in cumulative delta was 40,000. 38,000. Yeah. So 40K sounds about right. I mean, 40K in 30 minutes is a lot. A lot. Coming back to that. So we're now at a key inflection point again. So they still have not been able to get below the stop out zone. And they're right at it again. So part of me is saying like, oh, Seth, you were too cautious. You should have taken a day trade on it. But the other part of me is like, it doesn't matter because you're long treasuries anyways. But, well, like, is that really a reason to celebrate? Because I'm still down. No, this one. We're still down. I want to get back above, let's see here, 111.22. Which is a whole handle away. Then I would be happy. Fact. We're still in like what I would probably view as a mean reversion area. I don't know if that's how the momentum traders are playing it. But, you know, this especially if not, this whole thing all just kind of looks like a mean reversion area. This is, I think this is probably the steepest pullback we've gotten so far. Doesn't look very big on the chart. It's not very noticeable change in cumulative delta either. Okay, well, shall we read the zero hedge synopsis of the CPI to see if there's anything interesting in the details? What is reportedly the first real test of the tariff terror pass-through impact on the average American, Today's CPI print was expected to rise modestly following survey after survey suggesting the fecal matter is about to strike the rotating object, just like every mainstream media economist warned. I think that, Zero Hedge is using a little bit of hyperbole here and everything, but I think that is mostly a correct assessment. Most of the economists were saying that there would be inflation. Not as much inflation as the consumer surveys were saying. Not as much inflation as everybody on Reddit was saying, but I would say that most of the economists were expecting a slight uptick in inflation. And we are not seeing that at all. We're not seeing that at all. It makes you wonder, what would the numbers be if none of this tariff stuff had happened? Like if Kamala Harris had won the election, what would CPI be right now? I wonder. Anyways. Higher prices. ISM manufacturing prices expanded to 69.8, the highest since June 2022. ISM services ticked up to 65.1 in April, the highest since January 2023. S&P Global manufacturing firms increased their output prices by the greatest degree since early 2023. S&P Global U.S. services prices advanced. Richmond Fed manufacturer prices rose from 2.65 to 2.34. Oh, 2.65 from 2.34. New York Fed, 20. I'm not going to read all these numbers. Philadelphia Fed, Kansas City Fed, Dallas, Chicago PMI. Oh, okay. So they're pointing out all of the PMI reports that came out. So then we're seeing prices rise in all of those. We should see it in CPI. What did we get? A nothing burger again, as headline and core both printed below expectations. Energy deflation dominated the headline CPI. Core CPI was even more disappointing for the average PhD pundit as it rose spot 1, well below the 0.3 expected, flat with April's 2.8% year over year. Goods prices deflated on a year-over-year basis. Services cost price increases continue to slow, while goods prices accelerate very modestly. Oh, this is such a good chart. This is exactly what we're talking about. Yeah, the price of goods goes up at the expense of services. They have to spend more money on the product, and so they can't spend as much money to all of the people that they pay for support around getting the product. And the end result may be hard to predict, maybe kind of back and forth, and I wouldn't be surprised again to see next month CPI tick up a little bit. But so far it has been overall net deflation. Actually, not deflation, just overall net less inflation than anticipated. Okay, Trump just tweeting about the deal with China again. The deal with China is really, really weird to me. It's like, okay, they're touting this as the deal, and nobody cares. Go figure. I guess the market already priced it in. Okay. On a year-over-year basis, services cost price increases continue to slow while goods prices accelerate. So we guess we will just have to wait for next month to see the hyperinflationary hellscape that so many TV pundits told us would occur after Trump's tariffs were imposed. Cue the excuse factory, just wait until next month. I think that they're probably right that you will see people saying that. But they said that last month, didn't they? Oh, definitely saw that last month. Definitely saw that last month. So I wonder if I come here to Reddit.
Order submitted.
Oh, okay. The robot is finally taking a trade. And what is the trade? It is...
Order canceled.
Okay. Tried to take an order at 6. It tried to buy at 16.5. No, that doesn't make sense. That doesn't make sense. And I did put in here, where is... I definitely still got bugs in this thing, don't I? Where's my output window? Oh, maybe it was closed. Oh, crap. That means that I can't see it. Who is your broker and what is their round trip position cost? I'm using Edge Clear and I don't remember what their round trip commission is. I think it's something like $1.50 on micros. It is more than other brokers. I mean, it's more than AMP. And here on Reddit, I see a bunch of comments on the trade deal. Only a few comments on the CPI number so far. I highly doubt rate cuts are coming in the next meeting. When is the next meeting? July? Actually, let's come and look at that. That's a good question for X Factory. FOMC June 18th. So next Wednesday. Yeah, that's probably not happening. So June current target rate is 4.25 to 4.5, or let's say 425 to 450. There's pretty much 100% chance that it's not going to happen, but there is a July meeting. The July meeting, they are still pricing pretty unlikely. So is it September? Yes. Okay, but this guy does say something interesting. For the last year and a half plus of the Biden administration, inflation on goods would vary, but there were always two constant forces driving inflation: housing and food. Both increased by spot 3 last month, and that continues the trend of not being able to get those baskets down to 2% annualized. So I think that that is a good point. Those are the two factors that have, I think, kind of the Fed cares the most about. And you know, they're not coming down, but the housing one is super lagged, and I don't know where that's at. Either shelter and food are going to have to start slowing, or other sectors such as healthcare and retail sales will have to start posting consistently deeper negatives for multiple months. Nah, I think that, well, I think that the market expectation here is pretty reasonable. They won't cut in June or July, but September. Sure.
Order submitted.
Okay. So let's bring this back over here. Let's grab our output window. Trigger short. Entering trade short. Then why is it say buy limit?
Order submitted.
Okay, so I definitely screwed something up. What did you do, Seth? Manage order long. Manage order short. It did get triggered short. Triggered short. But then, when it actually took the trade, or actually, what do I call it? Manage order short. Maybe that's down here. Manage order short. Limit. Uh-huh. Uh-huh. Stupid error, but could probably see that one by doing a replay test instead, huh? I guess I need to change some stuff about the logging so that I don't get this like dozens of times, because that's kind of annoying. Okay. Why don't you ever use Edge Pro X from Edge Clear? Well, so one, you do have to pay for that platform. And I don't really feel like that platform gave me anything particularly special or anything. I think I might have missed some comments here. GK, does it domino further than that? For instance, a cleaning company now has to spend more on cleaning supplies and in turn must charge more or cut margins. Well, yes. So a cleaning company might charge more, but people will use the cleaning company less. Right? So what's happening is the costs on the businesses are all going up. The businesses are spending less somewhere else. Right? Like, if the cost of my cleaning supplies goes up, I can either A, increase what I charge my customers, or I have to cut costs somewhere else. And maybe you do both. And I think that, like, when you look at the economy overall as a whole, you do both. And the both is, well, that comes at the cost of other services, essentially. So far, overall, it's been less inflation. I kind of half think that, like, when all is said and done, like we come through this, there's going to be like a decrease in inflation. I wouldn't be surprised to see it do this sort of a thing. You know, like if we're looking at overall inflation, we would want it to be at spot 2.5 all the time, essentially. And what we're getting right now is, you know, we're at 0.1. This one was 0.1. Okay, well, maybe because we got the trade deals and everything else works out fine and we go back and everything's hunky-dory and we just go back to 0.25. Maybe. Maybe it goes like this and there's a little bit of this sort of a thing. That's kind of what I've been predicting. But let's just say that we get this one. What will people say? Well, I think that the cope will be, well, because Trump chickened out, we never saw the hyperinflation. Except for that he didn't chicken out, because the deal is 55% tariff on China? Okay. So at most, what, 3 to 4%? Oh, you know what? That's actually maybe a better way to look at it. So let's come back here for a second. Today. Okay. So today, here was the core CPI month over month, CPI month over month, or we just do year over year. Okay. So we want it to be at 2, and it's been a little bit above that, right? We want it to be right here, and it's been a little bit above that. Okay. So this is why the Federal Reserve has been like, well, we wanted to cut last year, but we didn't do it, and here's why. I smell something that smells like gas. I think I better go check that. But, you know, now this is annualized, right? So even though the inflation is less than anticipated, it's still slightly above target. So that's why it's like, wait till September, right? I'll be right back. Yeah, it wasn't dog poop. It wasn't gas. It was dog poop. It's kind of funny so far. It did not take the trade that it was supposed to. It's supposed to be short. It went long, but the long is working. Go figure. Let me go check that, and then the whole room explodes. Yeah. Okay, what were we saying? Oh yeah, annualized we're above 2%. Okay. So, and that has nothing to do with tariffs. That is leftover effects from the post-COVID inflation that we saw during Biden's term. So that's where I find it kind of curious. Like, okay, so if you wait for, you know, the longer run for the year number to say 2% before you say we can cut, right? You're probably going to be too late. That's kind of been the whole argument here. Trump is concerned that it's going to go lower. There's things in the tech market that kind of say it's going to go lower because tech is just getting savaged right now. There are some deflationary factors. It could turn lower than 2% very, very quickly. And in fact, I think more broadly, my play is that I think that we're going to move back into a deflationary environment in the long run. I don't know how long it's going to take, but I think that we're going to move back into a deflationary environment where the Federal Reserve has to buy tons of treasuries and hold a lot, just like we were doing before COVID. Because I think that AI is overhyped, but I do think that it is a pretty significant shift in the workforce, and it is going to be a deflationary force. It's going to be a huge increase in productivity, possibly the largest increase in productivity ever. And the result of that is prices of things goes down, which means that you have to print a ton of money to counteract that. So I got this, we're going to be reviewing a KVM switch, and I got it, and I haven't opened it yet. I wanted to like film opening it on our very, very nice table, but I don't want to wait. I just want to open it up. There was this thread the other day. It looks like that somebody like made a comment here and like rescinded it really quick because like it sent me a notification and now I can't see it. But somebody made this post on Reddit that was like, how market makers actually move price. Who actually moves price? Blah, 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 blah. Right? Obviously, this was generated by ChatGPT. How can I tell? Because ChatGPT always loves to do these points. Here's 1.1, 2, 3, 4, right? Uses all of these bullet points. Nobody on Reddit posts like that. This is generated by an LLM. So then I went and I generated one. I was like, here's a better prompt. Ask it to give you empirical information. What does it tell you? This narrative is BS. This misunderstands who market makers are. And it goes through the whole thing. And it cites studies. Gloston Milgram, 1985. Models a market maker adjusting quotes due to risk of informed traders. I'm not as familiar with this. Like, I haven't read this study myself, but I am familiar with it. This one gets mentioned a lot. Kyle 1985. What are you even doing if you haven't read Kyle? If you haven't read Kyle, go read Kyle. That is the best study. Okay. Almgren Chris. This is another really big one. Okay, Hasbrook. I'm not as familiar with this one, but it's not the first time I've heard of it. Right? Like, the LLM is basically saying what I would say, except for like way super expanded, right? But they didn't believe me. They're like, did you fact check this and everything? Well, I mean, yes, because it's saying what I would have said. They don't believe me. So whatever. Whatever. We are back to 16, huh? So through this whole noise, if I had really tried to take a trade, I would be up 5 ticks. So I don't feel as bad. Sweet, which one? Oh, I missed what were we talking about when you asked that? Oh, the KVM switch. So it's another TE Smart. Look at the box. Got a huge deer on it. It's an incredibly dense box too. They somehow pack all that stuff in there really tight. But the KVM switch that we had before, it was an HDMI switch, and it couldn't handle high refresh rates. But they now finally have ones that are DisplayPoint 1.4 and can handle 144 hertz monitors at 3K. In fact, I think it can do 144 hertz at 4K. So now it's like the holy grail. Unfortunately, I'm not working from home anymore, so it doesn't help me as much. But I think finally I get the holy grail set up here. I guess the holy grail would be all 3 monitors switched, and they do have one like that, but I didn't get that one. So must have cost. No, they're not that expensive though. That's the thing. Let me find it. Yeah, it's this one. So it can do 4K or it can do 3K at 144 hertz. And it's $329. So it's not like insane. Like if you're gaming with if you're a gamer and you work from home and you want to share your screens between your work laptop and your gaming desktop, you can absolutely justify $329, right? It just switches the screen. So what it does is it allows me to switch the screens, the keyboard, and the mouse between 2 computers. And one of the cool things that it can do is it can say, okay, these 2 screens, now they're on computer B. But it can also say, screen 1 is on computer A and screen 2 is on computer B. And then if you press Alt twice, it will just switch your mouse and keyboard between computer A and computer B. So you can control 2 computers with the same monitor, mouse, and keyboard. That's what it does. So like if I'm doing work from home, I give myself 2 monitors to work on, and I switch those between my work laptop and my home desktop. And then the 3rd screen, I can leave my charts on. And Discord. Tesla shares opening higher. Shall we come and check? I saw a tweet from Elon Musk saying that he regretted some of the things that he said about Donald Trump last week, that they were too far. I kind of thought that he would go back. Okay. Sorry, Tesla TSLA. Okay. So it is third day of gains. It is recovering the downside. Very interesting how that all plays out and works, but I've been trying to go the other way. I dream of having an e-ink display with somewhat of a high enough refresh rate. My eyes burn after a while on monitors? Really? So what kind of a panel are you using? Like, have you used these new... Man, I can't even remember the display technology anymore. So this, like, my center monitor is a TN panel. And the colors and stuff just aren't as solid and vibrant as, like, the is it an OLED? I don't think it's an OLED, but... QD OLED is the best of those three. Oh, OLED, QLED, yeah. No, there's another type. IPS. IPS is what I think I was thinking of. Yep. We got TN, IPS, and now the different OLED types. Or QLED. My TV is kind of an OLED type, and you definitely get good contrast on them. But if it's burning on your eyes, that probably just means that the monitor is too bright, right? Monitor is too bright, or you need the blue light glasses, right? Oh, what's up with the job? You're running tech for a company. They're making y'all go back. Yeah. Okay, so I've been doing a 3-month contract to hire with a company. They kind of do they do stuff in education. Is what I would say. This is the industry that they're in, I guess I would say. They sell to schools. And they're about to build out a number of cloud applications. So I've been doing a lot of fixing up their builds and fixing up their Terraform and their cloud environments. So we're getting close to the end of the 3-month contract, and the whole thing was they have the option to hire me afterwards or whatever, but to negotiate it. And where they're at right now is like the owners approved it to hire me, and so then they sent it to HR, and HR was like, oh, we weren't expecting this, we don't know anything about this role or what we can pay this guy or anything like that. So I think that HR is doing their thing, and we've been doing a training this week. So I'm hoping that once today is the last day of the training, that once we get back to office, I will hear from HR what they're going to do. It seems to me that they will send me an offer, but I'm concerned that the offer might be significantly less than what I want. So we'll see what happens. We'll see what happens. So there was like in the contract that I signed, there was like a number that was like a starting point number. It was like, you know, for this much, but subject to negotiation, right? And when I talked to the HR guy, you know, he got at the end and he was like, oh, well, but, you know, everything looks good. Oh, but what do you know, I asked the question then, and so then he brought up like the number sort of a thing, right? But he threw out a number that was significantly less than the number in the contract. And I was like, oh. But I told him where it was and everything. And then he was like, okay, well, I think we should be able to get an answer for you pretty quickly here and everything like that. So I don't know if that's good or bad or what's going on. Like, did he try to lowball me or did he just not know? I don't know. I don't know. So we're kind of in a period of high uncertainty with it. Negotiation nation. I don't know. So here's the thing that drives me nuts about this particular aspect of it. I've been there too. It's not fun, yeah. The thing that bothers me about this particular aspect is that I don't really feel like I'm negotiating. Like, I really to me, you're negotiating with the broader labor market about how long you're going to keep me, right? Like, if they do what I'm worried and they lowball me or whatever, I might take it and then more aggressively look for other jobs, right? So like, you don't you don't want to be in a position where you only have them for a year and then they've developed all this institutional knowledge and everything and then you don't have it. And that would probably be leaving like just when they need it the most too, frankly. So I hope that what they do, because what I think would be best for them is to give me a really, really good number that allows me to stay for a really long time. You know, if they start me high enough and you have the average, you know, amount that things go up or whatever, I could maybe be the rest of my career at this place, right? And that would probably be good for them because you want your infrastructure and your site reliability engineer guys to be around for a long time is better, right? So that's why I say they're not really negotiating with me. They're negotiating with the market about how long they're going to keep me. So hopefully they see it that way and make a good call. In my experience, companies always seem to lowball just to bid check and what. Yeah, that might be true. Yeah. But that's where I'm kind of like, maybe he just didn't know, because like the number that he threw out was like 40% under the market or something like that when I did the calculation. So we'll see. But I think the good thing is that they've got plans. Like they're kind of at that spot where like they're a small company and they've become a very large small company. So they are now transitioning into a mid-sized company. And that means transitioning to a more professional software development group and cloud applications. And they're doing a lot of stuff. Like they're trying to move more, like they're getting training on agile development, for instance. I think that there's probably going to be a little bit of shuffling around people on teams and everything. So they're doing a lot of stuff. Oh, they're building like a new room for that group. So like they're doing stuff. They're making moves. I would be really disappointed if they weren't willing to pay me the market price. Go on got on with a VP instead of CEO, and he quoted my prospective salary $100K lower than I had discussed. Luckily, it was a miscommunication internally and was promptly fixed. Oh boy. I would be freaking out for sure. You know what? It's something that I find so very interesting is that, you know, because I have some neurodivergence, but I've, you know, been on medications and so forth that I really don't exhibit those things anymore. But I still will have some default modes in some things. Like I can feel certain things causing me anxiety, things like that. But whereas before it would have just absolutely driven me crazy and or, you know, caused me to do something about it, now it's just like I feel it and it's like, okay, but that's not very useful right now. And I don't do anything. And I'm constantly, it's almost, actually it's not almost, I would say that I'm more prone to underreact. Things that freak everybody else out, and I'm just sitting here like, okay, well, let's deal with it. I think I'm there thanks to medication. I think that there's been parts through all of this that I really felt like crashing out, man. I think I kind of did mentally crash out to some extent, but you know, like if you're like Elon Musk and you crash out, right, it means going on like an unhinged rant on Twitter, right? I didn't do anything like that. It was just all in my head, right? I absolutely have crashed out. I really, when I go and I read around, you know, one side, something that's really curious that's still going on is like, if you go on and read Reddit, like everything is just doomer everything. Everything on social media right now is doomer everything. Go short treasuries, go short the market, everything. There's just no optimism whatsoever anywhere on social media. The economy is doomed. But then I go out to go shopping and there's lots of other people shopping. Like, come on. There's people out there with money still. There definitely is, okay? I wouldn't call this a recession. I see some fractures. I see some things where, you know, certain things happened. We could fall into a recession really quickly, so we're vulnerable. But the actual level that we're at looks really, really strong to me. Right? But you go online, they're just all doom all the time. So even though I know that they are ultimately wrong about the state of the economy and more broadly, like the state of capitalism in the world in general, I very much identify with a lot of the things that they say. I, like most people, have thoughts of crashing out. That it's just like you feel like you're putting in so much effort into things and you're never getting anything back out of it. It's kind of like they figured out, well, you need to give people incentives, so they have to, you know, if they work hard and then you should get rewarded and everything. And so they it was kind of like that. And then they like slowly clawed out the reward until like, oh, there is no reward anymore. That's how I feel with YouTube. Like, it's really hard for me to like really, really grind on YouTube because I did that for like the 6 months that I was unemployed and nothing came from it. How can I justify continuing to really, really grind and push hard on YouTube? When it's really like a very, very few people will go and become millionaires from being on YouTube, and then everybody else makes jack squat. How can you justify putting a whole lot of time into it? Right? And that, I mean, that's I guess the most extremist of crashing out. It's like, okay, well, we're still gonna make a video, but maybe it's gonna be once every other month. You know, like and this is the thing that I'm seeing in general, is that like we want to give people incentives, but then we've also taught people that, like, you know, you're going to do better if you get delayed reward. And they've kind of found out that there are some of us that are willing to just delay. And then at the very end, you find out, wait, but actually there's no reward there. I was delaying gratification this whole time. And then what happened is you looked at the people that took on all of the debt and did stupid things and didn't delay gratification, and you're rewarding them instead by forgiving their debt. What WTF? Right? Like, that's what I keep seeing, man. Yeah, this type of content is not so sellable. The one that does not sell dreams and promote. Yeah. I don't think that it's an intractable problem, which is to say, I don't think that there's no solution. But I'm just not so sure that I'm ever going to figure it out. I'm not going to stop doing this. It's just going to go through periods where maybe I'm not making as many videos, right? But the good news is that after this, if I do get hired on, then my wife should be able to go back to part-time, and I will have more weekends free and more evenings free. I'll get back into my full workout routine, and I should feel better, and I should have more time to work on things. And if they don't decide to hire me on, I saved a ton of it. So we should have enough time to go and find another job. And then we have the opportunity to maybe find another work from home job, hopefully. So I kind of think that all of the paths forward look better than things were. So, but I think that I would like them to hire me on full time, because I like the people at this place more than the other places I've worked. Yeah. DK, I really hope you get it. I genuinely look forward to your streams and get so much out of your knowledge. My wife is literally annoyed about how much I tell her about the time. I know, right? I mean, that was really one of the driving factors behind doing this. Especially starting the Discord at the beginning, right? Was like, my experience has been, I think a lot of traders wish that their spouse or the people in their life were more interested in talking about trading and things like that. And what I have found is that that's like a terrible thing. that you really don't want your wife to be super interested in trading. Like, that's great if she puts up with it, but really you need to not bother them with that shit. And you need to talk to other traders. And that's what this is, right? This is just, unless they're doing it, they're never gonna understand it on the same level that you do. That, like, why am I putting so much effort into this thing that's so unlikely to really turn out well for me, and even if it does, it's not that great, but we still push and do it because we enjoy it, and somebody has to do it, and nobody else is going to understand that but a trader. And when you try and, you know, pull other people in for your emotional support or whatever, all you end up doing is stressing them out, right? So, trader therapy, maybe. I'm probably a terrible therapist, though. That's the one thing I think. I think that my wife is unusually stable. She is very, very low in neuroticism for a woman. Is that neuroticism? I don't know if that's the right word. She's not very neurotic for a woman. And she did psychology, so like she could absolutely probably go and do her master's degree and come out and then do psychology for traders and make super big bucks, right? She would be really good at that because she'd have this understanding of stuff from me to be able to help them. But I don't know if she was ever going to do that. I don't think that she... Yeah, neuroticism is the right term. I just don't like the isism at the end because it makes it sound like I'm talking about something sexual. You know? I've got enough for the both of us. I think that Seth not on medication is slightly more neurotic than the average male. I think that I have kind of a bigger threshold though. It's kind of a weird thing. Like there are things that would make other people, that would bother other people, that would, it's negative emotions, right? So there are things that would trigger negative emotions in other people that do not trigger negative emotions in me. That helps in trading sometimes. Just having a little loss is no big deal. But when I do get triggered, my response is much stronger than other people's. And maybe it's just an ADHD thing, like you feel the full brunt of the emotion and there's nothing to stop it. You know what I mean? So that's where I say, like the overall, without medication, the overall exhibiting negative emotions, probably higher than average man. Yeah, it's like the hyper focus kicks in. Yeah, when you get an emotion, it's just like on a constant feedback loop and it doesn't go away. Okay, well, almost time to get to end things here. It's still in this long, by the way. I wonder if we had actually gone short. It was very, very close. It was very, very close on both sides. But I think that it would still be short. And I suppose they would be basically break even, but well, we'll let it go. Yeah, it was a good session. You know, I still, even though I think that there was only like 5 or 10 ticks in it for me, and that like my instincts to be careful about it and everything were correct, I still wish that I had taken the risk. I wish that when I started seeing that and started thinking about doing something at 445 that I had just clicked in with the market order and gone for it. But it's okay. We got PPI tomorrow. That could be even more interesting. So I don't know if we'll get a bigger move, but I think that some of the data might be more interesting. And once we have both parts and everything. Is it asinine to trade ESNQ via Jigsaw? Is it just too fast? Well, so it's definitely harder to trade it when it's faster. I wouldn't necessarily say that it's too fast to trade. Because oil is just as fast, if not faster. And I think you can get really amazing reads in oil. I think that I would probably, if I was going to switch over to something, it would probably be oil. But I just don't feel like I understand the oil market itself very well. So that's kind of where I'm never been able to really develop an edge over there. I think that the problem in ES and NQ is really more that the nature of an index kind of makes the flow that comes out of it really random. And so your ability to really truly develop an edge in indexes is limited, I think. Outside of swing trading, like I think that if you're going to do indexes, I think that the index is really, really well suited to swing trading. That you can come in and you can say, okay, Donald Trump is going to be doing the tariff thing. He hasn't announced it yet, but it's coming, and I want to be short the S&P. And then after that happens, you can say, well, they're overreacting and they are going to get a deal and they're going to start pricing in a deal and I can go long. And those, you can get these swings where you can get it and hold it for a really, really long time in ES and really, really make tons of money. That's probably the way that I would play if I was doing equity indexes. But day trading, I've never seen anything from index futures that suggests to me that a retail trader can really, truly develop a strong edge trading equity index futures. I've seen a lot of people that think that they found it, but I've never seen somebody that's come through with like the right statistical numbers and everything to show me that it works. So, versus like when I come in on treasuries, I think that we have a lot of results to suggest that somebody with the right amount of work can develop a strong edge discretionarily trading treasuries with order flow and news. Hard, probably not worth it, but possible. Thanks, bud. Got to cut out to a recording session. Yeah, me too. It's time for me to get going. So I will see you guys tomorrow. Stay excellent, team.